All the major indices in the US have recently been hitting record highs. Within these indices, a record number of stocks have also hit highs never seen before. The market breadth has also been supporters of this move up, with a number of other stocks at recent highs. So what is going on? And really the question is, how long is it going to last? So we've got IG Chief Market Strategist here, Chris Weston, in the studio. Hello to you. So we're all witnessing this and it's all phenomenal and tremendous, but I mean the question is, how much longer is this going to go on for? Is there a stop point?
Well, yeah, we know that markets don't go up forever, right? And
don't they?
Well, so obviously we like to see, I think corrections in the bull market are obviously healthy. I say corrections, I say 10%, but I don't think we're going to see those sort of moves anytime soon. We just have to look at implied volatility. We look at the volatility index, which looks at volatility over the next 30 days or expected volatility. It's so low at the moment. The market's just saying we're not going to see these big moves, these big range expansions. But markets are born in pessimism and they roll over in euphoria. And I think we've got to that point now where you're clearly seeing fairly euphoric conditions. And the New York Stock Exchange, if we go a bit broader, we've got this huge level, if not record level, of companies trading at all-time highs at the moment. We go into the S&P, which I've looked over the Dow because it's a larger, more diverse index, where obviously the Dow's 30 stocks. The S&P, the number of companies at 52-week, 4-week highs, 40%. We can go into the number of companies trading above their 200-day moving average. That longer-term moving average has hit 80%, which traditionally has been a level where the market tends not to go much higher than that. You tend to see around 80% a time when markets start rolling over a little bit. So we've got to those fairly euphoric conditions. 80% of stocks above their 20-day moving average, that shorter-term moving average. And from that perspective, I think we are feeling a bit more sort of euphoric conditions coming through. We haven't had a 1% sell-off in the S&P for something over 90 days now, and those are, if we think about markets in probability terms, where you're trading markets, you're always thinking risk reward, you're thinking probability. Are we going to see much further upside here? Well, you've got the Dow, the Russell, the Nasdaq, and the S&P all trading with an RSI above 80. Now that shows the strength in the trend that we've been seeing. That shows you this really strong trend that we've been seeing in markets, but it also tells me if you're thinking about risk reward, perhaps we might see a bit of a pullback coming through in these markets. So we've got into market technicals, or some of the certain oscillators, the market internals suggesting perhaps fairly euphoric conditions. Are we going to see some mean reversion coming through these markets? I think there's a higher probability that we do see that. Now, of course, what's going to cause that? One, you might see just a bout of profit taking after I'd probably say about 11-12% move in the S&P since Donald Trump was announced. 30% move in the banking index if you use the KBE, which is the banking sector ETF. Since Donald Trump's been since he was being elected. So we could get some profit taking that manifests and compounds on itself a little bit, or you may see something coming through from Donald Trump that's the market saying, well, we've got a little bit ahead of ourselves. There's a bit of a concern, or we could see some sort of political development really sort of take hold in Europe. Obviously, the Dutch elections and the French elections coming up fairly shortly as well. So I think all of this combination, if we mix it all together, suggests there's probability of downside. And I think if you speak to any retail client, the majority of them are expecting this market to go down as it stands at the moment.
It's a cocktail of volatility waiting to happen, isn't it?
Well, I think if you look at the global economy at the moment, I think there's a real improvement coming through. The PMI series around the world, the Purchasing Managers Index, manufacturing or services have been improving around the world. If you have a look at some of these economic surprise indices on G7 or developed markets or emerging markets, this measures the data announcement relative to the expectations, and they've all been moving higher, which shows the data's not just been beating, but it's actually been improving as well. Credit data in China has been very strong. There's a whole host of indicators that we look at to suggest that we're going to see global trade really start picking up from here. So I think that's really been underpinning the S&P, and people want growth stocks. They want banking stocks to express that view on reflation and the idea that Donald Trump, with his fiscal measures and tax reform and infrastructure spending, could create inflation and growth going forward. But I think there's been a genuine improvement in global economics, which has really underpinned this. And then if you get the momentum-based hedge funds, which have to buy when the market's trending up, they have a systematic view, I think that's been in place as well. So I think you've got these big momentum funds, massive hedge funds, have billions of assets under management, have been putting money to work as this market's been trending higher as well. The question is, if we see volatility pick up, have a look at, keep your eyes on the US volatility index, and we actually see the price action start rolling over, and we start seeing some of these moving average crossovers, which is your technical sell if you're a systematic trend following fund. That's when we're going to start seeing it really compound on itself, and this market could roll over. Of course, if you add in some of these big economic concerns or political concerns, that could where we see a decent pullback of, say, 5% plus, which of course is where our clients are expecting to see. But at the moment, I think there's been a number of factors. Not just been Trump for me, it's been the actual improvement we've been seeing in global economics, mixed in with some of these trend-following momentum-based strategies that have been pushing this market higher. The question, of course, is it time for a bit of a breather? And that's where we are right now, and that's the question everyone's asking themselves.
And we want to know, we want to be millionaires. All right, Chris Weston, thank you very much indeed. That's our Chief Market Strategist here at IG. Thank you for watching. We'll see you on Monday.